The following is a presentation of TFNN.
Good afternoon, folks. This is your host, Steve Rhodes, and welcome to our Celestial Charting webcast. And for those of you that aren't able to join us live, or whether you are, you can always send me an email at steve@tfnn.com. If you've got any questions, you know that, and I'll be happy to respond back to you. We'll leave the questions and answer period towards the end of this, and so let's go ahead and get started. Now, we have a lot of new subscribers, and so I just want to quickly, a little bit of housekeeping, and we're doing this webcast every other week. So right now it's August 10th. We always do it at 3 p.m., and the lunar strategy, if you will, that we're taking a look at is the full moon that we've got coming up on Saturday, August the 13th. So please put on your calendar the August 24th session. Again, at 3 o'clock, we'll be taking a look at the new moon. But all you folks know we take a look at much, much more than just the new moon, full moon, and any aspects going around there. Now, for those of you folks as well that are new, what we're really doing during this webcast is we're taking a look at either lunar cycles, or we're taking a look at other aspects, and all of this can be obtained in the New American Ephemeris, 2007 to 2020. It's produced by Starcrafts Publishing, and their phone number is right there. Now, in the upper section up here, if you've never seen an ephemeris, this is dealing with all of the moon data, if you will, and whether the moon is closest to us, farthest away from us, apogee, perigee, whether it's a full moon or it's a new moon. And then down in this area right here, this is what's called the daily aspectarian. This is what's describing, I know it's a little bit blurry, but this is what's describing the different positions of the planets in relationship to each other, or the moon, at least with regard to some primary angles. And that's what we really take a look at. Now, the primary angles that we focus on, folks, are these 5 areas. These 5 being either square, which is at 90 degrees, opposition at 180 degrees, trine at 120, sextile 60, and conjunction at 0. And these are your major aspects that are out there. And so we're always taking a look at the relationship, especially between planet to planet, with regard to those specific angles on a specific day. And that's what the ephemeris does. That's what the aspectarian does. Now, if we take a look at where we're at in this current cycle, and what I like to do is in this case here, I've separated the important daily aspectarian information, and that again is where we're dealing with planet to planet in most instances, or something that's going on inside the planet. So in this case here, August 8th, you had Venus sextile Saturn. Now what you've got here, this is the actual symbol. This is what you would see in that aspectarian. So if I go back here, that's really what it is that you're seeing in this area here. There's a key inside the aspectarian, but then you have to get comfortable knowing that this is the symbol for Venus, this is the symbol for sextile, this is the symbol for Saturn. And so if you keep, if you do get an ephemeris, you'll want to go ahead and create your own little key off to the side just to make it easier. What I've done is I've converted all of that to text so that it's easy to go ahead and print out here. Now, you can see that in the aspectarian information, the one that I've got highlighted, which is Mercury conjunct Venus, also referred to as combust, is the one that we're going to focus on the most. Now, we're going to focus on that the most because I've run all of the other tests, if you will, for each of these other cycles to see if they've had any type of significant impact on showing a market turn that's lasted for any period of time. And when I take a look at everything else that's going on from a daily aspectarian standpoint, the one that we want to go ahead and key in on is this coming Tuesday, which is Mercury conjunct Venus, also known as combust. We take a look at the different moon phases that have been occurring since Saturday. We're dealing with each of these here. Now, and depending on some different things that you might trade, these have an impact, maybe a little different impact on the stock market than they would on a commodity market. So what you have here is you've got the moon in its first quarter. I just simply call that a moon phase. You've got VOC, which is really void of course. That's what it stands for. And it's the moon moving from the last aspect to the next zodiac sign. you'll find if you pay attention to when the moon is void of course, you'll see a lot of volatility, specifically in the metals market, whether it's silver or it's gold. So if you trade that, what you might want to do is you can see that you've got the moon void of course on here. You've got it on Tuesday, yesterday. You've got it coming up on this coming Friday. You've got it. When is it? The next time on the following Wednesday, and you can see the time. Now this is ephemeris time, which is basically 5 hours prior to Eastern Standard Time, and you can go back and you can take a look at your charts just to see if there was some volatility during the time period. Now I only show when this begins, but in the ephemeris it'll show you when it begins and when it ends. Now, with regard to what we're going to really be taking a look at in talking about today, it's really going to be the full moon, and it's going to be when the moon is farthest away from us here on Earth, and that's at apogee on August 18th. So you can see we're just trying to tie together this August 13th date, which obviously there's no trading, August 16th date on Tuesday, and then on Thursday. And so you'll see as we go through the presentation the importance of taking a look at that. Now, so when it comes to combust, combust is really, it's the planets of Mercury and Venus, and Mercury and Venus are the closest to the sun. Now they travel, very fast, very rapid around the sun. Mercury in 88 days, Venus in 225 days. I don't have my calculator handy, but if you divide 225 by 365, I believe you get around 69%. 0.618 or similar, close to that. But combust is the conjunction at 0 degrees of Mercury and Venus. All right, and what you find is that this aspect, these two aspects, they've got a tremendous effect on the bombardment of solar rays on Earth, and it's really about Mercury and Venus moving back and forth between the sun and the Earth, and they affect weather patterns. I don't know, and so you might want to take a look at that. But more important than really weather patterns, folks, is that they simply seem to have an impact on the psychology of traders. And that's really what my focus is for you, is what is the impact of the psychology on traders as we go back and we take a look at historically, specifically by market, what type of impact, and is there something that gives us a probability from a trading standpoint. If we take a look at, and this is the best picture that I've been able to find to actually show you what Mercury conjunct Venus looks like. And right here, and this is from the observatory in Chile. Right here, you've got the moon, okay? And so then up here, you've got Venus and Mercury. Now, conjunction is nothing more than talking about, a position, if you will. We talked about that being at 0 degrees, so you can see how we've got all of this lining up with each other. Real picture. And so a great way to just simply understand what it is that it looks like if you are interested in that. What you're more interested in is trying to understand the combust aspects and what type of impact they have. So this here is a chart, and what I've done is I've gone back, as you can see, to 1998. So there are 34 different times, just simply going back to 1998, because that's when my S&P chart. I could take this back further, and I would have to just simply apply it to probably a gold chart or to the Dow. And if we just take a look at this, so this is based on applying these aspects to the S&P 500. And so when I say that it marked a high, so on August 26, 1998, and you'll see the chart, I have that here, so you'll be able to actually go back through the presentation, you'll be able to pause it, take a look at it, or maybe go ahead and take a look at that on your chart. What you can see is that it marked a high, and when it marked a high, it actually was off by 1 day, meaning that the high that came in the day before. So that's what the minus is indicating, that it came in the day before. The duration is how long of an impact did it have. So if we came in at a high, and it happened the day before, how long before it really made its next swing point? And that's what that information with regard to the duration is. But when we're taking a look at combust, what's really important to take a look at is what other lunar event was occurring at or near. And when I say near, what I'm using is like a 2-day orb, if you will, at or near the same event. And that's what you've got highlighted in blue. Now, it's highlighted in blue and it's apogee, okay? Because now go back here real quickly, because when we took a look at what astro events were going on right now, you can see we were taking a look at Mercury conjunct Venus. What else was going on around the same time? Well, a full moon and apogee is the closest thing. So we've got this 2-day orb. Now, I use 2 days here because Saturday obviously is not a trading day. So, giving it till Monday certainly makes sense. Tuesday probably stretches it just a little bit, but I'm just being consistent with regard to the 2-day orb. So if we come back here and we start taking a look at it, you can see I haven't highlighted these other areas, and we can take a look at that. We can discuss it for a minute. But what I really wanted to focus on was something similar to what it is that we would likely experience as we come into this weekend and the beginning of next week. So you can see here that on November 4th, 2002, we had combust with apogee. In this case here, the high came in. So this is a high. And this is something that you want to really pay attention to because, is the market making a high or is the market making a low? In this case here, the market was making a high and it occurred 2 days later. Lasted the duration, again, was 5 trading days. If we take and the reason why I have these two here is a bright pink, purple, or what have you, just simply because you happen to have combust so close to each other. This case here, October 30th, and then 3 days later on November 3rd. Here you had one on May 27th, and then June 21st. I probably shouldn't have highlighted those. Don't know why I did, actually. And the 9th and the 16th. Obviously, this one's very close. This one's somewhat close, and this one's closer, just 7-8 days apart from each other. So I just identified those. It's not a cycle that we have. It was just something for a reference point for myself. And so if we take a look at 527, though, you had a combust coming into a low. Very possible what we might have going on here. We won't know until we see how the markets, run into the Tuesday time period. Now, what you can see here, when it made a low, and it did that 4 days prior, and it lasted the duration for 19 trading days. If we come back to December 28th, 2004, well, we can see the market was making a high. It made that high 4 days later and lasted for 14 days. 2005 made it right on it, lasted for 19 days. 2006, day afterwards, only lasted a day. August 17th, 2007, came in as a low. The day earlier, lasted for 39 days. October 25th, 2010, came in right on target on the specific day, but only lasted for 2 days. So the interesting thing is when we take a look at when we have combust occurring with apogee, all right, what you can see is that, you've got 2 occasions here of the 2, 4, 6, 8, 9 occasions. 2 of those occasions you had it last for 19 days, once for 39 days, several for just a very short period of time. And now, if what I don't have highlighted here is you've got combust with regard to coming into the full moon. And the reason why I didn't go ahead and highlight these is because of the fact that full moon is coming in on Saturday and combust is coming in, very late on Tuesday. But it's still something for us to consider. Until it plays out, we won't really know. But you can see here when we do have a full moon and combust. So, like if these were right on top of each other, I think would have more credibility, if you will, in my mind, than with it occurring several days later. And so, but still, we want to pay attention to this, okay? Because you can see on a full moon, you've got a duration of 37 days, 33 days, 45 days, 42, 7. So we just want to see how this plays out. Now, in this case here, I would much prefer that we had combust coming in and the full moon the day before, the day after, or right on the day. So study this chart with regard to understanding how combust impacts, or has in the past, how it's impacted the markets with regard to any trading decisions that you're making. I've gone ahead and summarized those 34 so that it's on this chart right here so that you can take a look at it. So that you can see how often were lows marked on combust and how many times did it happen 4 days prior, 3 days prior to 1, how many times right on combust, and how about afterwards. So here's an interesting thing. Let's assume that one of the options is that we're coming into next Tuesday, we're making a low, irregardless of what we might do today, tomorrow, and we're making a low. Well, what I highlighted for you is you can see if we're making a low from a combust and you're going to go ahead and we're going to trade on this, we know that the low likely is not going to come in the second, third, or fourth day after combust. So for us, if we're trying to go ahead and align price with time being the cycle of this planetary aspect, we know that it's likely to occur either right on the day, right before the day, because you've got 12 of those 17 events occurring right then and there. So as we come into a low, and that's really the purpose of this chart, is to help you to understand, from a probability standpoint and being able to place a trade, because, like none of us want to lose money. We want to put our money at risk when it makes the most sense. And that's the reason for going back through all of these cycles and understanding probability-wise what makes sense. Likewise, if you're coming into highs here, okay, so if the market were to move up from here through Tuesday, absolutely a possibility. Then we're looking at really the same thing, aren't we, where combust is likely to make its high either the day before or right on it. But you can see in this case here, it's got a distribution where it could happen 2, 3, 4 days. It's a much wider range of distributions, whereas coming in on a low, you're in pretty good company that it's likely going to occur that day or the day before. So what does all that summarize? What I've done is taken a look at the day after, the current day, the day before. In this case here, I went back 2 days prior, and you can see that 82% of the time, that's the range in which combust has had an impact on some type of market turn. And if you take a look at just simply the day of and the day before, you're looking at a 65% typical impact. So we'll be paying very close attention to that, and we'll be trying to line up price with the aspect, and depending on whether it is a high or it is a low. If we take a look at, let's move on to a chart. And right here on this chart here is showing the last 4 cycles. So you can see the May 16 time frame. In this case here, you can see how it made a low, and then just went up for a few days. In this case here, June 9th. In June 9th, the high was made the following day. So if you went back and you took a look at the previous chart, you'd see it's showing, -1, if you will. And then the impact. Again, here you can take a look at the October 25th time frame and the November 5th time frame. So you've got this chart, and you can place this on any chart to see what type of impact it may have had. See if it was similar to the S&P, in case you want to take a look at it on a commodity or something. If we go back further, then we're taking a look at March 29th's aspect. And you can see that, there was a low that was established, and this lasted for a much longer time period. In this case here, September 15th, so you can see how everything here on these charts. And I've got each of these charts laid out for those 34 aspects so that you can come back and you can take a look at it. Maybe you'll see something different, if you will. But you can see how these have, had an impact, how they've shown a market turn. It's why we want to always pay attention to what, to these types of aspects that are going on around us. We can take a look at, in this case here, November 17th, and you can see, combust came in, and then the continued move that it had. You can see here it had a market turn, really only lasted just simply for a couple of days before the market turned back up. And let's continue on. Here we go back to the 2004 time frame. You can see, how it is picking, within a few days, sometimes right on the day. And when it says near here, folks, it's because July 9th was likely a Saturday or a Sunday, and so then you have a choice of going either, the day after or the day before, and that's when you see the near, what that means on the charts that you're looking at. If we go back to 2002 now, again, you can see how combust is identified and the impacts that it's having on the price and action. Go back further to 2001. And I know everybody gets the idea. I just simply want everybody to have the opportunity to go ahead and take a look at this, be able to pause on these charts as they take a look at what's going on in the marketplace and the impact of combust. And go here, and I believe that this may be the So now we're all the way back to 1998, and again, this, as you can see, it's all on the S&P 500. So you can see its impact, and you can see the length of time that it had a impact on price action. So now let's move off of combust, and what I want to do for those of you that may have been with me right from the get-go, or even before this, I was taking a look at the new moon, full moon cycle when back in the July time frame for us, when what we had was we had a new moon. with a solar eclipse, then a full moon with a lunar eclipse, and a new moon with the solar eclipse, back to back to back. And as most of you know, what I did was I went back through my charts. I went all the way back through the Dow to identify when that triple combination had last occurred. But not just a triple combination, because there have been several triple back-to-back-to-backs, but when those occurred, and they also had these other signs, if you will. And what I was able to find was that all of that went back. The only other time that that occurred, from a charting standpoint, that I could go back to, was in 1946. And so when I had gone back to 1946, what I pointed out, and what was interesting as I pulled up the charts, was that if you take a look at what happened in 1945, you can see the big run-up from the August of 1945 area all the way up into May 30th. Now, if you go back and you take a look at our charts, S&P, Dow, whatever it is, what you'll see is the big run-up from August 24th of 2010 up into the May 2nd time frame. So that was the first thing to give me pause to say, that's interesting. And then what was also interesting was just simply how the market reacted. And you can see, in this case here, the market corrected all the way back to the August time frame. Now, from an aspect standpoint, if you were to go back to August, I believe it's August 24th and August 25th, those are two very large astro dates. 2 weeks ago, at our last webcast, we talked about the P-index dates. And there were two very large P-index dates that were back-to-back. One was a small, where it had 3 or less aspects that occurred, and one where it had 14 or more aspects. And if you're just new to the program, what I'd like you to do is these are archived. So go back to the last one, and you can hear our discussion and see our discussion on P-index dates. Now, something like that, and that was very powerful, doesn't happen that often. And the power behind that, is what propelled the market. Now, you can say what propelled the market was the announcement of QE2. Well, the Daily Aspectarian, this stuff is written in stone, if you will. We know when the alignments of the planets on the ephemeris. I mean, my ephemeris goes back to I can go back to 3000 BC if I want, and I can take it out as far as I want to. So all of this stuff, it's nothing more than just math and alignments, and when things are in position by day, if you will. So how is it that so long ago, what was pointed to us was that in the August 24th, 25th time frame was going to be a very powerful day, and somehow that inspired, QE2, and if it wasn't QE2, it would have been something else. Either way, our market moved up. And when we take a look at these aspects up here with regard to the lunar trader strategy and how it made its high and then moved all the way back to the August time frame, interesting. Now, what is interesting about this aspect here, as you know, in the last webcast, what I brought out to everybody's attention was this Ceres retrograde aspect. Ceres, had never been studied. However, Ceres is at the top of the CBOT. If you go ahead and Google that, you'll see that the Ceres is actually at the top, a big statue at the top of the CBOT in Chicago. But I'm not aware of any work that anybody's done to go ahead and take a look at Ceres and its impact on the markets. And I was preparing for that 2 weeks ago on Tuesday night. And, it was new, and I was like, when I saw what I saw, I didn't have enough information to go ahead and play on it because it was new to me. Now, I wish that weren't the case, and I would, now that I had the information, if I knew then what I knew now, things would be different. But that doesn't matter. I do know now what I do know, and that is that I went back and took a look at this aspect over the weekend, spent the entire weekend going back to the Dow, going back to 1931, and taking a look at every single aspect to see what type of patterns existed. Now, this series going retrograde occurs basically every 15 months, and what's interesting is are the patterns that occur inside it on a continuous basis. And so there's enough for me to write a book. There's enough for me to probably do a couple hours on it right now, go back and take a listen to the last one that we did. The last one that we did only went back to 1998. Because it's only a 15-month cycle, that's not enough good of a test sample. So that's why I went ahead and took it all the way back to 1931. To 1931 gave me, I believe it was 64 samples. And after 64 samples, I said, well, this is something that I am going to put into my toolbox. And it's something that I want you to be able to put into your toolbox. And when we take a look at the 45 to 46 time frame, what I will tell you here is when you just take a look at the chart, as soon as it came back and it touched this area, that was the last time that you saw a low for quite a while from 1946 on. So this thing really acted as a very strong resistance support area. And so what is interesting here, and this is why I do this stuff, and it's why, I want you folks to interpret the information, take a look at the information, and even pose questions to me or send me emails. I wasn't, the question was asked of me, right here. Am I predicting that the market will crash or move down, just as we saw here, going back to the lows? And it's impossible for me to predict that, if you will. But in essence, even though we haven't gotten back to August, we will. At least that's what the information is telling us at this stage. And and the bottom line is we did. So this is why it's so important for us to go ahead and use some of these other elements as indicators. And that's all that I do, folks. It's all that I look at this stuff for is indicators. I'm not an astrologist, an astronomer, not at all. I'm looking at this with regard to patterns and the history to see if it shows us anything. If we go back and we take a look, again, this is just nothing more than something that's a little bit more blown up for you to go ahead and take a look at. But what I've also done in here from this time period was take a look and identify each full moon and new moon to understand when we use the sell on the new, buy on the full during that time period, how did that work? Because at this stage, I'm of the belief that what I identified a month ago or two, is actually coming to fruition. And so if that's the case, when it comes to the new moon, full moon strategy, well, what does that really mean? What did that mean during this time period? And thought that would, that we should use that as some type of indicator for how to go forward from here. And so that's what this page is all about. This page is taking the information from May 30th, 1946, all the way down, if you will, to the lows in October of 46, 10-10-46, and if we just continue to use the same strategy, how would that have won? In this case here, you can see it's really pretty much a draw. You'd have 5 wins, 4 losses, and 1 draw, if you will. So that is not a real good probability that's not, to me, 50-50. That's not a trading opportunity. Probably for you, it's not a trading opportunity as well. And so what that is telling me is that with regard to playing the full moon, new moon strategy right now, we're going to go ahead and we're going to search for other pieces of information in order to go ahead and place our trades. Other patterns. We'll still use this information, but this information, using this information exclusively, wouldn't make sense. Doesn't make sense to me, and that doesn't mean it can't make sense to you. There is information that we can, take a look at, here. If we take a look at the new moon cycles, if you sold on the new moon, you had 4 wins, and you only had 1 loss. So whereas using the full moon, which is what we're coming into right now, you only had 1 win and 3 losses. So what we saw during our last new moon cycle, and we were coming into a low, if I had known this information then and I said, let me go back to 46 and apply it, probably would have made a different trading decision. Typically, since August of 2010, when we've been coming into full moons, in fact, I think it's almost 90% of the time coming into full moons, when the market has moved down into a full moon, 90% of the time we've had a success cycle, if you will. And so that's what this information is here for you to go ahead and take a look at, and also so you understand the thought process behind why it is that I come up with the actions that we'll use for our trading strategy. Now, we're talking about series in retrograde motion. Even though we talked about it 2 weeks ago, and then over the weekend, I put together a quick little web update, for my newsletter, and because I had been spending the entire weekend for the most part taking a look at it, what I was looking at was this area right here. And so and I posted this up here, I don't know what time, maybe a couple of hours ago. So obviously the chart has changed a little bit since then. But what you can see, what's really perhaps most ominous to us is how we approach this line here. And we're going to go through it a little bit while we have time here, take a look at some of the historical charts and what it is that I found. When you come into this area, this series retrograde area, like we did with a long-range bar, as we did a couple of days ago, what that does say is that we are going to go lower, at least based on past history. And you can see how close it is that we are already to the August 10th lows. We're almost there, if you will. Now, as you know, we went ahead and played a counter-trend bounce because we had such a huge downdraft, because the market was so oversold that, and because of some volume indicators, we went ahead and took a look at, placing a trade on the Qs. And even right now, as we speak, with the market being down 440, I think we're still at break even or just a little bit above that. But it is a little bit of a... what I guess most important thing is to understand, right, what I want you to understand is because of how we came into this area, because of how we came into with a wide range bar, this does tell me that we're going lower. And I simply want to be able to point that out to you because, I don't know what other positions it is that you have out there in any of your 401k accounts. And you may have already taken some heat up into this point in time with anything that you've got, and I'm suggesting that you be very, very careful. A lot of times in those 401k accounts, there's not a lot of, there's no stops in there, and right now we are in a dangerous, dangerous cycle. And remember I talked about, as we were going through this, the beginning of this session here, is talking about the August time frame when we had those two P-index dates back-to-back, real powerful. Well, if we take those out, and I think there's a good chance that we take those out, this area here is similar back to the August 17th cycle that we had that hadn't been broke for 100 years. And once we broke through that, that was the indication of the bear market, that the bear market had started. So if we come through this area here, and I'm not prognosticating that we will, this is something you have to really pay attention to. But you can see that the way that we've broken this series support area, that we're certainly going to head down here, and we'll see what happens when we get down there. Well, if I take the chart a little bit further out and expand it out, you can see that the next series cycle that we go to goes really where it comes across is January 11th, 2009. Obviously, more than a couple of years ago. But I just simply was looking for any other series cycles that went across. And and so when we break this August area here, if we do break this August area, this is the next spot that we would get down to, the 8600, the 8421 to 8602 area. So again, this is why, quite frankly, it's better to be a trader than an investor right now, especially with these volatile marketplaces. But what I want to do is I want to present to you information for you to take a look at, for you to determine how to apply it for you in your trading. When I was looking back and going through each of the cycles, again, nothing more than just laying these on the charts. What I've done here is I've just brought out the ones that are most important with regard to where we're at now. And what I mean by that is where we've had wide price bars coming into, either coming down to it or going up into it with regard to it being the series going retrograde. This here is the October 87 crash. And what you can see as we're coming down off of, the A to B equals C to D, in this case here it made a little bit more than a 1 to pi, if you will, 3.14, so really quite extended. But what you can see is as you came off that C point, you had a wide bar down. Then you have another wide bar down. This one's not necessarily so wide, but it's, it's pretty good. It's that waterfall effect, if you will. And then here, the day before the crash, wide bar down, you closed underneath it. If you knew what I knew, and you are learning that now, from what I looked at and going back all the way to 1931, you would see that anytime you come into this with a wide range bar, you have to be extremely, extremely careful. If we go back a little bit further, in here, I wanted to show you a version of the up move, if you will. And this goes back to Operation Desert Storm. So we're back in 1990, I believe. And you can see here, this is the only gap that exists on the Dow chart. It is still open right now. Well, a gap is just like a wide range bar as well. It's, you have to fill it in mentally, if you will. And so you can see that we gapped up, and we gapped up going into it. Interestingly enough, the following day you went up and you touched it. That became resistance. You came back down. And when you came back up, the day when you came out of that bar, you also had a wide range bar. And then we had a big, huge up move, that took us from basically this is the 2,900 range all the way up to 3,400. And as a percentage basis, that was a heck of a move. Now, obviously, you can see we came out of here. We came up into the next series event. That's what this is right here. We went sideways whoops. Didn't mean to do that. We went sideways for quite a ways, building up cause. Look at this long range bar coming down here. Still didn't get into it. When we did get into it, it was nothing more than some short bars. You can see how this acted all along here on the bottom, acted as a support line. And then when you break out of it, you break out with a nice wide range bar, if you will. So here you break out with a wide range bar, and you move up into, in essence, the next series. Here you break out with a wide range bar. So you want to pay attention to this. If we go back a little further and we take again at the 1946 area, what you'll see here is you'll see the long line when we came down in the market, and it touched that series in retrograde, and you can see it got tested twice, was never able to be broken through. You can see how this acted as a strong support area. Why? I don't know. Don't have a clue. I just want to know that it works. I just want to find something that works, that has consistency. And so, again, this is just blowing up a little bit more, going back to 46, 47, and you can see that, these were the lows that were put in, and the market continued to move higher from there. If you ask the question, okay, well, so where are we at now? And again, what I'm doing is I'm pulling up the chart from the 2 sessions ago. I haven't updated it, but we know that July 15th, the full moon had actually worked before it failed. We went ahead and we bought a low as the market was moving down into us, but it did eventually fail. And you can see here that our distribution of when the full moon comes in, whether it's on the day of or the day after, with regard to a low coming in, that is occurring 73% of the time, either the day of. In this case here, it can't, right? Because it's on Saturday. So to me, this would be saying that the low would likely come in around Monday, the day after, if you will. And this was our probability. This is our distribution, if you will, of wins and losses going back to August 24th. And you can see that the full moon, buying on the full moon, really gave us with the market moving down into us, really gave us a high probability of success. Again, what I pointed out to you earlier was going back and taking a look at since the 46 time frame, how those distribution of wins and losses was working, and we don't have near the same type of thing. So I see the chart that looks similar to what we see in the 45, 46 time frame, and so whatever trades it is that we'll put on, whether it's going long or short or what have you, I will discount the current strategy and take a look at more so what it was that was going on in the 45, 46 time frame. And so that's with regard to, where it is that we're at today. And I'll go ahead and update this chart, but it really doesn't change. It really doesn't change anything. And so, that brings us back to where we're at right now. And in this case here, I believe that what I'm looking for, and we'll know. I was looking for today to be some additional conviction to what we saw yesterday. That's not happening with the market being down 402 points. And so the thought process was that simply if we could catapult up to here, that I'm showing you from the move of this area, in essence, beyond May 27th, whatever the date was that we made the high here, all the way down to the low that we made a couple of days ago. Here's the 0.618 area. Here's the 0.786 area, which just happens to be right at the bottom of series retrograde, exactly where you would think you would run into resistance if the market could have made it all the way back up there. I don't know that is going to happen at this stage. Yesterday gave us an opportunity, but today is taking away all of yesterday's gains at the moment. And so, with that, that's the conclusion of today's webcast. And, I can take some questions, or we can take a look at, I can put up a live chart if you'd like. And again, you can always send me an email at steve@tfnn.com. And so are there any questions that anybody has at the moment that I can help with? So in this morning's update, you noted a close below the Dow, lower than 10.9. It was negative. Noting that. So it's a great question from RMK, and it's really about taking a look at, and let me go ahead and post up our current chart so we can see where it is today. Okay, so we can see where it is that we're trading at, and what I was indicating was that if we close below that 10.965, that that's pretty ominous, because if I go ahead and I use my retracement tool here right now, and I go from these highs all the way down to the low. Give me a second here to try this. I've got this area marked here as 0.32. Normally you're used to me seeing a 0.382. 0.32 has to do with the Ceres planet, just the math behind it. I believe it takes up 32% of its solar system. I guess the best answer to RMK is, I think at this stage we're pretty close to break even or a little bit in the money. I need to go back and take a look at the volume. Well, let's do that while we're live here. Let's do that while we're live. Let's go to the ETFs and see what the volume inside the ETFs are showing us with regard to this pullback before I answer that. So we're going to go ahead and we're going to look at the Qs and see what it is that we see. So we see on the Qs here right now, we still have pretty big volume out there, especially when you go back and you take a look at, you can see just the volatility that we've got out here. This is the flash crash that we've got, right? And you can see that type of volume. And, we're not at that range, but we're pretty close to it. I guess the best answer would be, if I don't have certainty here with regard to where the market will close, so I would be comfortable saying, go ahead and take the trade off, or take half of it off. But I can tell you by going back and taking a look at those series charts that we needed to get a close above this 11,079. There's no other way to look at it. Whether we do bounce from here or not, if we do bounce, then that's great. We'll find a way to to pile into that. But quite frankly, with regard to everything that I've taken a look at when we've come through this area, there is no good news that I've seen. And only having a one-day short covering bounce, which it looks like that's what yesterday was, there's no reason to keep your money at risk based on the information that we have here as a group. So I hope that answers your question. Any other questions that we might have out there? It'd be great if we had audio here. Let's see if we let's go take a look at the rest of the charts as long as we're out here. Let's take a look at all the ETFs and see what we've got going on. Let's take a look at the Dow, the diamonds for the moment. Now, you can see on the diamonds, the volume is off quite a bit. And so let's take a look at an intraday basis. Let's take a look at the 10-minute chart and see what we see out here. And on the diamonds, give me a moment here. So let's take a look at, I've got the 5-minute chart up here on the diamonds. And so, what we're doing, Let's just look at the ABC that we've got made up here. There's our A point. All right, here's our B point. See, and it's going to take us, it says that, it's going to bring us potentially all the way back to this 106 area, back to the low. And what we would have to do is, let's see, here's our B point, which is at 1140, again on a 5-minute, 147,000 shares. And if we come all the way across, let's see what we're coming into that with. We're coming into that with 262, 234. It's 379, 249. It's trying to bust through that. Now, if it can't bust, it's trying to bust through that with some volume. So, it's giving us now that's just on a 5-minute chart. Let's go ahead and change the time frame on this. Let's change this to a 10-minute chart here real quick. So this being the B point, you can see that we've got us 374,000 shares. And right now, we've got 665. So it's doing everything it can to bust through there. And let's see, the low on that is 107.72, 107.78, 107.77. So it's almost as if it's building up some energy right now to be able to bust through there. It hasn't gotten down, hasn't really tested the bottom of that swing point on the 10-minute chart. Let's take a look at it on a 30-minute chart here. And on a 30-minute chart, right now you're into this candle here that's got the biggest volume at what was that, at 3 o'clock in the afternoon. When you close below that, it gives you every indication that you would get down to the bottom. Anytime you're inside a candle that's a swing point, even if you've done it on lighter volume, which we have here, absolutely we have, your real confirmation of a bounce, you'd like to then see it go all the way to the bottom and test that. So would I consider an SDS QID trade now? I wouldn't at the moment because the volume, as we're still coming into even this candle here, it's still a little bit too light. You'd want to see it come in with conviction. If you can break this with conviction, then the answer would be yes. Would rather wait for the market, to prove itself to us. When I was taking a look at, quite frankly, if we go back, and I just go ahead and I'll just put this on a daily chart here. On the daily chart, as we took a look at it, I was going to look to add to new positions once we cleared this bar right here, the August 8th bar. Once we cleared over that, then my thoughts were that we could get some real momentum in the market to potentially push us up to that 0.786, to push us up to that series candle, which would be an ideal place to go ahead and go short. But right now, until we get below the lows, we could do nothing here. So again, we got light volume. So that's my thought process on that. And again, if we take a look at the Qs specifically, because those are the ones, if we're going to go long, which we did, it was a matter of which one was the strongest, and certainly was the Qs. And so even if you take a look at the Qs, you can see here, we still haven't been able to really bust through the 0.618. It's showing you its internal strength, even with the market being down 470 points right now. So, it was a safer trade to go long, to play a counter trend bounce. And, and that's proving to be the case. And you can you can see the strength. The Dow's down 471 as we speak and as we're doing this. But whether or not this area is going to hold or not, that's a whole nother. We'll find out towards the end of the day. But it has held up. It has held up the most. Any other questions that you guys might have out there? How you just kind of have to respond back, yes or what have you. How's this information? Is this good information? Are you guys, because each webcast, what I'm trying to do is bring about, new information, especially stuff that is going on right here, right now, so that you can use it. And, if you've got some suggestions on if there's some information I'm not covering or what have you, if there's other markets maybe you want me to lay some stuff over, just send me an email or let me know otherwise. But hopefully this is all good information, and it's different, it's unique, absolutely, especially the series retrograde aspects. And, we will find ways to use this information to our benefit, to our advantage. So, in any event, it's 3:53, and so I'm going to go ahead and close this out now. And thanks so much for your attendance, and again for all of you folks that are attending by archive. Any questions? just simply go ahead and send me an email at steve@tfnn.com. So thanks so much, folks, and appreciate your time, and live with gratitude. Love you. Take care. Bye-bye now.